Thanks for joining us today on The Close. I'm Morella Fernandez. Markets close in 30 minutes. Let's get to the stories we're following out of the BNN Bloomberg newsroom. Canada is working on a comprehensive deal with India to boost trade and investment. The Indian Commerce and Industry Minister, Piyush Goyal, is on a 3-day visit. He met with Prime Minister Mark Carney in an effort to strengthen bilateral ties. Carney says a deal with India would be a game changer for Canadian businesses and workers. The two sides say they hope to conclude a deal by the end of the year. Bank of Canada External Deputy Governor Nicholas Vincent says Canada needs to rethink its approach to education and training. Speaking in Montreal, Vincent cites the challenge young people are facing in the labor market, noting they're overrepresented in the unemployment category. He pointed to structural factors, including an influx of younger immigrants, a mismatch of skills, and the growth of AI as possible reasons. Shares of Curaleaf seeing a steep decline today. The cannabis company launching a stock split ahead of its planned U.S. stock exchange uplisting. The reverse 1-for-3 split will take effect next week and will ensure the company meets the share price level criteria. Curaleaf says the rescheduling of medical cannabis in the U.S. has created a potential pathway towards uplisting to a major U.S. exchange. A new report from Equifax Canada says insolvency numbers have hit their highest level since 2009. Equifax says systemic risks persist. Despite Canadians trying to stay financially disciplined during an economic downturn, 90% of homeowners are choosing insolvency over bankruptcy, with the average non-mortgage debt reaching $43,000. Let's see where the markets are right now. The TSX down 208 points so far in the day, 0.6%, still over 34,000 at 622. Let's move south of the border. The S&P up 42 points, or 0.6%. The Dow Jones down 156 points, 0.3%. And the Nasdaq gaining 283 points on the day, up over 1% at this hour. So even as the markets watch the price of oil move around with news, of course, from the Iran war, higher prices and developments in Canada are tailwinds for the energy sector. Let's get more from Adam Chilio. He's Senior Portfolio Manager at iCubed Investments. Thanks for coming in.
Hi, thanks for having me.
Before we get into energy, let's talk about movers. We saw Micron gaining on a new $1 trillion market cap. That's a first for them today. Let's talk about downstream effects on other semiconductor stocks. Can you give me sort of a broader picture here?
I think it's just the general overall continued increase in demand. Memory is now the main bottleneck as it relates to the whole build out of AI, because focus is shifting more from training to inference. So that's kind of AI at the end, and more memory is needed for that. So of course you've seen, I think it's more of a general news today. Micron doesn't really report until July, but I think this has to do with just more just massive increase in demand for memory that's going on. And anytime you see positive news coming out of geopolitics, the shift seems to focus back on the strong earnings backdrop as it relates to technology and AI. So if you hear something good news about in the Middle East, then that just shifts our attention right back to companies like Micron.
Yeah, it's sort of the tennis match between energy, sort of oil and tech right now, back and forth. Let's talk about a Canadian gainer today, which is MDA Space. And of course, that's on SpaceX IPO that's expected, and a lot of enthusiasm around that. Do you expect that to continue until we actually see what happens in June?
Yeah, I think the effects of MDA Space are because of the focus on the SpaceX IPO. And that seems to be a rising tide lifting all boats in that industry, really. Now there's, the industry's growing, there's much more demand, and a benefit for MDA Space is, well, SpaceX is generally very vertically integrated, so they kind of build all the components of their whole process, and you need an advantage, or you need a bit of supply chain redundancy is where MDA Space can fit in, especially other global governments or other global defense agencies who may need access to their components. They could be a reliable backup if there's a single source risk from SpaceX. And then there's also the issue too, I believe it's the international trafficking in arms regulations related to jurisdiction. So SpaceX is US. If someone needs access to SpaceX components and they're not from the US, may not have access due to that. So MDA Space functions as a backup for that as well. So overall positive for them.
Okay, let's talk about tailwinds for the energy sector. Of course, the conflict in the Middle East has been part of that. But if there's a de-escalation, what do you see happening? Will we still get the effect of a tailwind for a while?
Yeah, I think so. I don't see oil prices going back to what they were prior to the conflict, even if everything gets resolved. I think the geopolitical instability has shown that it's very fragile. So I think you'll see probably more, I don't want to say panic, but security buying of oil and countries increasing their stockpiles, and I don't want to say hoarding, but just buying more. So that would keep prices elevated. That's globally. I think net for Canada, there's been some general positive news as it relates to energy. I know Alberta and Ottawa have hammered out a plan for a new carbon tax policy set to keep the increase below what was agreed to before and play on over a longer period of time. And that's also contingent on Ottawa's support for a pipeline pact and a plan to double our energy capacity by 2050. So overall, it's a net balance of, yes, increased costs, but also better market access, say, to coastal markets and stabilizing revenue, which I think overall for the Canadian energy sector, that's better than what originally would have happened, which would have been
you see that as
carbon
a
tax increase and and no pipeline.
So it was a comparison of either having it with or without. Then you say this is a better scenario.
Yes.
Okay. Let's talk about a stock pick you have today, Canadian Natural Resources. A pretty safe play in that space, but why do you like it?
I think they're a direct benefit of that backdrop. Look, going forward is, yes, it's going to, they'll be balancing higher costs with better market access. It can stabilize the revenue. They get more project visibility. Specifically to them, they're forecasting, I believe it's a modest 3% growth in their oil equivalent barrels per day. And even prior to this news, they already have about $6 billion in capital that's allocated to high return, short and medium term projects. So those two things specifically for them, with the positive backdrop coming out now, seems to be they're managing modest volume growth. They manage low cost and long life assets. And that's in general, just generally going forward, we're seeing that being supportive for earnings and cash flow growth. And subsequently that being cash return to shareholders as well, which they're already demonstrating. I believe they marked their 26th year of consecutive dividend increases. You
also like Parker Hannifin. Tell me about them.
Yeah, they're going on to the U.S. They're more of a picks and shovels industrial, kind of like how during the gold rush, who sold picks and shovels made all the money. And they make critical components mainly in motion and control systems. So industrial machinery, that's everything that allows either your industrial equipment or factory lines to move and operate reliably. And overall, while we see the earnings backdrop for industrials in the U.S. still positive in terms of growth and more stable than other sectors, it is a tougher environment. And Parker Hannifin does have sales growth that's positive this year thanks to their more profitable aerospace division. But more importantly, why we see them as more of a quality growth industrials is that their earnings are growing much faster than their revenue. I believe their net income's up about 24% this year. And we think that's more real than it is financial engineering. Their margins are strong structurally because they have good pricing power. They've been able to absorb tariffs. They also have local manufacturing, and there's a bit of a technology moat around their aerospace division. So overall, it's generally positive for them.
Let's talk about some of the tech stocks. You like Alphabet within the Mag 7. Why do you like Alphabet among them?
Well, we see Alphabet, of course, everyone knows what they do, but we see them both as a quality grower and as a cash flow grower as well. They have two areas of growth. First, of course, is cloud, and then now with the build out of AI. But they also have search and ads, which is a strong cash core that supports that. And where we're seeing the most growth come from them is in their cloud services. I believe this quarter they posted a 63% year-over-year growth rate, which is the largest posting of growth they've had since they broke that out of their revenue in 2020. And they're getting the most growth from the AI cloud platform, AI infrastructure, and AI embedding. And why we kind of like them really is they're able to monetize AI twice. First through the build out of infrastructure, obviously, and then second is embedding it in their products. And it's not simply tacking on it at the end, it's embedding it in billion user products. So that's video and image generation directly in YouTube or Photos, or AI assistants fully built into their productivity suite. That's like Sheets and Google Docs, etc. So overall, they're very interesting to follow, at least.
Okay, let's leave it there. I'm out of time. Thanks for your time today.
Thank you.
Well, we have Adam Chilio, Senior Portfolio Manager, iCubed Investments, coming up. 3 big Canadian banks report earnings tomorrow. We'll take a preview of that when we come back. Second quarter Canadian bank earnings get underway tomorrow with BMO and Scotiabank. Valuations now surpass their American peers, but is the setup that much better for Canadian banks? We got perspective from Matthew Lee, equity research analyst at Canaccord Genuity.
We're in a situation where capital market is excellent, credit is relatively benign but not improving. Loan growth is still slow, but I mean, overall operating leverage is positive. So what you're getting is, on top of buybacks, a lot of earnings growth.
What do you see as the main drivers here for the potential earnings growth that we could see coming out this week?
Yeah, I mean, I think the number one thing you have to think about is capital markets, right? A lot of this has been talked about geopolitical oscillations. That helps trading revenues. That creates a lot of movement in the markets. The other side of that too is investment banking. Over the last year and a half, we've had a lot of people sit on their hands and wait to do transactions because they weren't sure about tariffs, they weren't sure about geopolitics. I think there's a lot more demand for M&A, a lot of demand for raising equities. So you're seeing both those businesses thrive. Wealth management as well has been a very strong part of the business. Obviously, equity markets have been constructive overall. That does help with AUM and AUM growth.
When it comes to M&A expansions in general, do you think Canadian banks should prioritize expanding their U.S. operations over other international markets?
Yeah, it's a great question. I would say that overall M&A is probably out of favor right now. There's a great focus on ROE, return on equity in the Canadian banks, and I think that's a great thing for that to be occurring right now. ROE is fundamentally a basis of allowing for better profitability. So, to have better ROE is always an improvement. What I'd say right now is, in terms of expansion, there is definitely a better economic environment in the U.S. versus some of the other international businesses that these banks have. That being said, I don't think I'm necessarily pushing for additional M&A.
To what extent is the ongoing conflict in the Middle East a factor here? Is it a key driver of credit provisioning for banks moving forward?
I think so. And I think specifically those that have international exposure outside of the United States. So if I think about global economies that are both maybe lower GDP per capita and import fuel, so Chile for BNS or Cambodia for national, those places are probably a little more challenged. And it's going to happen in two phases, right? First, it's going to be credit and provisioning, to your point, but also loan growth, right? Loan growth will be slower if the consumer is more pinched and corporations don't want to invest.
Yeah. Okay. So I do want to go through the banks and get your expectations for each of them. So you've got Bank of Montreal at a buy at the moment. What do you expect from the earnings results from BMO?
Yeah, I think, all the banks across the board, I'm expecting earnings to be strong. Again, back to capital markets, right? But I think with BMO specifically, what we're looking for is more color on their ROE trajectory. BMO's great story right now is that they're going to have this 15% ROE bridge by the end of 2027 and into 2028. If you think about ROE exiting 2025, it was around 12%. So that's a huge amount of earnings growth just from kind of blocking and tackling and doing the right things. So we're interested in hearing more about that.
Bank of Nova Scotia is the next one. You've got this at a hold at the moment. Yeah. What about Bank of Nova Scotia? Anything stand out to you?
Yeah, I mean, look, BNS has executed well as well, but I think the international exposure, like I talked about before, that's a big risk at this point, right? Not that it's going to necessarily blow up, but the fact of the matter is that you have to be more cautious when you think about BNS, just because that international exposure, could be a challenge.
Canadian Imperial Bank of Commerce, you've got that one at a hold too?
Yeah, I mean, I like CIBC. I like what they've done. I think in the personal bank and the commercial bank specifically, they've done a very good job. My challenge with CIBC is more around valuation versus growth, right? So I think, where do you find that next leg of growth for CIBC? Where do you, find that next ability to push up revenue, push up earnings? I think that's the question for CIBC.
Next up is National Bank. So you've got this one at a hold as well.
Yeah, I mean, National Bank's very expensive, and for a good reason. They've done very well in trading. They've done very well in wealth. I would say that the two markets they're most exposed to, Quebec and Alberta, are both very strong. So, the fundamentals for National are good, but it is very expensive. It's the most expensive of the 6 Canadian banks, and to me, that gives me a bit of pause.
Royal Bank of Canada, what do you think? You've got this one at a buy.
Yeah, I do. And, Royal's always been a premium valuation for premium ROE story. It's going to be. And frankly, I think that their exposure to the US on the capital market side gives them a leg up even against the peers in Canada. That being said, I think that they have to figure out another way to add an additional leg of ROE. That's the question for Royal.
And then last up is TD. You've also got that at a buy.
Yeah, I really like TD. I think they're executing well. They went through a lot of trouble with the AML a couple of years ago. They came out of that, and they've been repositioning their U.S. book. They've been doing a really good job with managing the Canadian bank. I talked about this last quarter too, but they have a massive retail footprint, right? And converting that retail footprint to wealth relationships, to commercial banking relationships, to deposits, to loans. I just think TD is in an advantage position in that front.
It's interesting, like when you look at all 6 of these banks, there's really not that much that's different about them, right? Is there ever going to be a time when we start to see some kind of gaining ground or see more growth than others within the category of the 6 big ones in Canada?
I would push back on that. I'd say that there is quite a bit of difference between them, in terms of how they're positioned from earnings perspective, right? Like U.S. exposure is a big difference. BMO and TD have large U.S. exposures. BNS is their international outside of the U.S., right? That's a big difference. And, the U.S. business isn't a small piece. For BMO, it's 30% of earnings. So, there is differentiation, but I would agree with you that the core business, lending, borrowing, capital markets, wealth, they're fundamentally the same. So I don't think you're ever going to really deviate from that. I would say, to take a phrase out of sports, it's a copycat league, right? So as one bank does one thing, and if it's successful, the other banks will try to do the same thing. I think we'll continue to see that probably for decades.
Matthew Lee, equity research analyst, Canaccord Genuity. The Western Canadian premiers have been meeting in Alberta. We'll have the latest from their talks when we come back. Western Canadian premiers are in Alberta today, wrapping up a 2-day meeting. For the latest from there, let's go to Bloomberg's Calgary bureau chief, Ian Bokoff. He joins us now from Kananaskis, Alberta. Thanks for joining us, Ian. We all know there are several fronts of friction between Alberta and BC specifically, but what do you expect to come up at the meetings today and yesterday?
Well, yes, you mentioned there's a lot of friction, and the big things are, of course, the pipeline, the proposed pipeline from Alberta to the BC coast, and also separation. So the BC premiers and Alberta premier in particular are expected to have a bit of a frosty relationship right now, even though Danielle Smith, the Alberta premier, said on last week that she had bought some boots for Premier Eby of BC. So the pipeline is definitely going to be a big talking point. BC is generally opposed to it, and Alberta wants to build to the northwest coast. And then, with separation, basically every other premier has come out and said they, believe strongly in the United Canada, believe strongly that Alberta should stay in Canada, and generally disagree with the idea of separation. So that's obviously going to be a big talking point after Smith announced there would be a referendum related to the topic in the fall.
I'm sure there will be a lot of weighing in on that when we hear from them later in the day. And big for the West, of course, Bloomberg reporting today on 2 Canadian energy deals involving foreign investors. Can you tell us about those?
Yeah, so kind of good timing or bad timing, depending on how you look at it for the Western Premiers meeting. I reported this morning on a Minnesota-based company buying a stake in an Alberta oil company to produce oil in the next coming years. And my colleagues in Ottawa and in Germany reported on a deal with the German energy company that Canada is going to announce tomorrow, and that's related to LNG. And the BC Premier obviously is a big proponent of LNG out of his province. So a big deal there that Canada is approving. I'm sure, it might be viewed a little bit within Alberta that, BC is getting a big project moving ahead while Alberta is still waiting for its pipeline.
Yeah. Bloomberg's Ian Bokoff, appreciate the update. Thank you for that.
Thank you.
Toronto businesses bracing for a wave of FIFA World Cup tourists. The city's scrambling to get the last-minute preparations done. Here's more from CTV's Heather Wright.
Extra TVs are being hung up at Fox & John's, a restaurant and bar in Toronto's Liberty Village.
We're adding TVs basically anywhere we could fit them.
Bar manager Samantha Besteo says World Cup preparations began 6 months ago and include the hiring of additional staff and a new streamlined menu to help serve the packed crowd expected here throughout the tournament.
It's going to be such a fun time here just in the city as a whole, but it comes with a lot of nervousness and we kind of don't know fully what to expect. So we're kind of going into it super excited, positive spirits, kind of ready for anything though.
Liberty Village is used to hosting big crowds. The neighborhood is the unofficial gathering spot for fans of Toronto FC. But the crowds expected during the World Cup will likely eclipse anything this area has seen before. For the roughly 10,000 people who live here, the tournament brings excitement and some trepidation.
It's definitely going to be busy, but I think it'll be fun. It'll be a lot of good vibes.
With 45,000 fans expected to pack Toronto Stadium for each match, in addition to the fan festivals located nearby, the foot traffic through this part of town will be a big boost for businesses.
It's going to be interesting, I guess. There's going to be crowds of people. There's a lot of hype behind it.
Kevin McDougall owns Merci Mon Ami with his wife, a restaurant and catering business. It has survived the economic crisis of 2008 and the COVID pandemic. He says the economic climate right now is just as tough, and the World Cup will be a big help.
So the margins are tighter than they ever were. So something like this definitely will help increase volume, which increase, revenue. So your margins are still tighter, but you're getting more revenue.
So the World Cup kicks off in less than 3 weeks here in Toronto, with the city expecting more than 300,000 visitors over the course of the tournament. Heather Wright, CTV News, Toronto.
Let's have a last look at the markets before the end of the trading day. TSX is down today 180 points, or about 0.5%, at 34,650 right now. Let's go south of the border. And for the U.S. markets, a mixed day. The S&P is up about 48 points, 0.6%. The Dow Jones down 82 points. And then we get to the NASDAQ, which has gained 313 points. So it is up at 1.2% today. We'll give you the end of day numbers when we look at them after the break, as well as the stocks that moved the most. We're back in a moment. Here are the closing bell for the end of the trading day. At the NASDAQ, Isabella Bank Corporation ringing the bell. In New York, Goldman Sachs with the honor. And for the TSX, Global Peer Financing Association ending the day. You're watching the close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. Here's a look at how we ended the day for the TSX, which is down 177 points today, or 0.5%. The S&P gaining today 45 points, 0.6%, taking it to a record of 7,519, beating the record from this month on the 14th. The NASDAQ up today over 1% as well, or 312 points, ending the day at 26,656. Let's take a look at the movers. In Toronto, TerraVest Industries, which is an oil services company, gaining 7.7% today, but down about 2.9% over the year. 157.65 is where it ended the day. Let's get to BlackBerry, still climbing after reporting some positive earnings recently. It is up over 5%, or 57 cents, to 11.65. All right, let's get to 5N Plus. 5N is up 5.2%, or $2.37 to 47.65, and that is gaining on a number of other movers in that space. Superior Plus is also moving today. It gained 6.7% or 52 cents, taking the share price to $8.32. America's gold and silver dropping today 3.7% or 31 cents to $8.11 a share. And then Bausch Health, always moving. It is down 3.8%, 26 cents to $7.46. MDA Space a gainer today. Lots of shares in rocket and satellite spaces moving on the expected IPO, of course, of SpaceX. As SpaceX does satellites in low orbit, $4.9% up, or $2.89 to $61.82. Let's go south of the border. We kept an eye on Ferrari today. It's down 5.3%, or $18.33 loss per share. And that's after they unveiled their first electric vehicle, which clearly was not embraced. Let's join Bloomberg's equities reporter Stephanie Hughes. She joins us now to talk some more about the movers in Toronto. Stephanie, let's talk about Bombardier. Shares they were gaining today. We didn't show them, but on news of a contract. Tell us about that.
Yeah, that's right, Morella. So looking at Bombardier, it was an interesting mover. Not exactly the top performer, not a bottom performer either, but an interesting one nonetheless. So it initially gained by nearly 3% at its highest point today, which was enough to bring the share price to its highest level since 2002. It did end up reversing all of those gains later on in the session. Not entirely sure what happened there, but what happened earlier in the day was that it announced that its defense segment announced that it would provide 3 Global 6500 model aircraft to the Australian Border Force, which is introducing its global platform in Australia for the first time. So Bombardier already has an established presence in Australia with 75 other business jets in the country, but this is the first time that Global specifically is making that entrance into that market. So this got some positive commentary from some members in the analyst community, including RBC Capital Markets analyst James McRaggle, who viewed this as a positive for Bombardier in that it aligned with his team's view that the defense business was really shaping up to be a durable growth engine for the company. He also added that the global platform's introduction to Australia is really marking a meaningful milestone for Bombardier's defense business. And what was also interesting here was that it wasn't just Bombardier moving on this news. There was also another company, a lesser-known company called BNN Technology Group. That's a Toronto-based supplier of circuit boards and control panels for the defense industry and aerospace industry. It was also gaining today, that one nearly by 13% today, bringing the share price to its highest level since 1994. So it's been a while since we've seen the stock move at that level. So it should also be noted that Furon Technology was awarded the Bombardier VIP certification in 2025. So clearly it's connected with Bombardier to some degree, but very interesting to see just the ripple effect that contract has brought, Morella.
Okay, let's leave it there. Stephanie Hughes joining us today in Toronto with that. Up next, how low-price stocks can help you beat the S&P 500. That's coming up. Low-price stocks are not necessarily small caps, and the strategy can help outperform the broader S&P. While in Canada, disciplined value is a better approach at this time. That's coming from Brian Belsky. He's CEO and Chief Investment Officer at Humulus Investment Strategies, and he joins us now. Thanks for your time.
Thanks for having us. By the way, it's so wonderful to be back here in Toronto when it's warm.
You caught us on a good day, Brian.
It is great. The sun's out. The Jays are playing. I got to wear my shades. It's great. Thanks for having us.
You should have been here on the weekend. It was a totally different atmosphere. Anyway, let's talk. Big mover of the day, of course, is Micron Technology. It hit the $1 trillion in market cap for the first time. Do you see the Mag 7, which Micron is not part of, expanding at this rate?
Well, you know, what's really great about what's happened with Micron is the AI storm has really gone through all the different areas of tech. It started off with hardware, then it went to software, then it went to chips, then it went back to software, now it's into memory. And so memory is one of those areas that Micron obviously is a big part of, but The issue that we've had with that stock is obviously it's up on stilts, and it's very difficult for a name to buy, number one, if you missed it. Number two, we earned our stripes as an analyst and sector strategist in the United States by looking at sector fundamentals with respect to earnings and valuation and operating performance. And I don't like it when most people are saying it's different this time with Micron earnings, it's different this time with memory earnings. But typically and historically, it's rarely different never different this time. And I think too many people are saying they're always going to make money forever now. And I think that's dangerous. So Micron in the memory space is the most volatile earner of any industry and technology. And so we have missed the move. We're still outperforming the market and the portfolios that we run against the U.S. and not owning Micron. But I think it's amazing for the company and it's amazing for AI, but it doesn't mean you have to chase it here.
All right. Both stock indexes and oil prices were mixed today. Does it still pay, as they say, sell in May and go away?
Sell in May, go away has not worked very well the last several years. I think on the oil side of things, oil can go up. Oil went up pretty fast and go right back down a little fast. I think people are still having some complex PTSD, quite frankly, with what happened in 2022. Inflation typically goes up like an elevator and down like an escalator. But I think when we go back and look at WTI or Western Canadian Select relative to what's happening in the oil energy sector, but also relative to the big indices, meaning the TSX and the S&P 500, we think the elevator is going to come back in. So we think ultimately the prices are going to be reversing back down into oil, which will help the consumer, help the inflation side, and I think help on the interest rate side as well.
All right, let's get to one of your investment strategies, at least for the U.S., which is low-priced stocks, is what you look at the end of the calendar year. We've got a chart here showing the compounded annual growth rate for this versus the S&P since 1990, I believe.
Yep.
What is the reason you see this strategy as one that works?
Well, it's incredible that it works. And so we have run a factor model as part of our work for, 25 years. And so we've looked at 57 investment factors in the United States and the S&P 500, and low price is the #1 performing factor. Now, it's not that easy, ladies and gentlemen. You still have to have a diversified portfolio. It's part of a factor in terms of what you would own and things like that. But low price works, I think, because of the compounding feature of continuing to buy companies over time and continue to add to your position. And that just works. It also reinforces the longer-term investing part of it in terms of sticking with a name. So traditionally, low price is the best performing factor.
Interesting. Okay. One of the low-price stocks that you like is Amcor, which is a packaging company. Tell me a bit more about it.
Well, packaging space, what's interesting about the packaging space is that when you think about the material sector, packaging is actually in materials because of paper and wood products and things like that. The material sector in general, the last couple of years have received so much press and so much news with respect to what's happening in the precious metal side of things. So whether or not it's gold, silver, and I think from a diversification standpoint, it's a way to own that and have exposure in that sector, again, at a low price that actually from an industry perspective makes a lot of sense to own within the sector.
Okay, let's get to Canada because you have a different approach here. You prefer disciplined value strategy because of the cyclical weighting for the TSX. So we've got another chart. We'll show the outperformance there, but it's slight compared to the last comparison. We have this from 2002, I believe. But how does it compare to passive index investing that's cheaper?
Well, so the TSX index is obviously skewed by banks, energy, and materials. But there's a lot of cyclical components to the market, whether or not they're industrial companies or cyclical companies. In the way that we look at disciplined value, we start and stop with looking at companies with debt-to-equity ratios below 1, making sure that they have positive earnings so you're not buying a value trap. Remember, a valuation has a numerator and a denominator. And the denominator is something called earnings, usually when you're looking at a valuation. So if the earnings actually go down, the valuation goes up. So that's why it's very important to look for companies that are actually growing their earnings as well, so you're not buying a quote-unquote value trap. And so that's what has worked in Canada, a little bit more defined. You have to own less names. There's less names in Canada that work that way relative to names in disciplined value in the United States. But it's another way that we think to look at Canada that really no one else is looking at.
Okay, and one of the stocks that you like here is Bird Construction in Canada.
We do because we like the industrial space in Canada. If you strip out the big three, industrials is the largest sector in Canada. It's really interesting that a lot of people don't know that. But at the end of the day, too, I think as well as when you start to see more and more housing and other construction notions come back on the market, we do think that the loonie and interest rates in Canada will continue to be low, which that is a burgeoning fuel for the type of construction company that Bird Construction is.
Okay, let's get to the IPO that everybody's talking about, which is SpaceX, of course, but there's also OpenAI and Anthropic expected this year as well. What is your strategy on these?
Well, we've had the good fortune of running equity portfolios for clients at different banks for, oh my gosh, well over 20 years now. And our rule is that we usually do not buy an IPO until it's trading in the public markets for at least 12 months. Now, some of that may be taking care of itself with respect to SpaceX because there's been a lot of talk in the institutional marketplace that SpaceX and Tesla are going to merge. So that's one way to potentially play that. In terms of the whole fundamental factor of this, OpenAI is a very different company from our view relative to Anthropic. Anthropic actually has cash flow, sales, and some earnings. OpenAI is a little bit more like what I used to remember some of the IPOs and software companies that came out in the late 90s and early 2000s when I was a strategist back then. So from our lens, we would be more along the lines of SpaceX and/or Anthropic. The products itself are very similar. There's a lot of talk that because of the legacy relationship between Sam Altman and Mr. Musk, is that Musk is really in it to really win this whole AI thing. And some would say that they have a better product. XAI is a better product than OpenAI. I'm not ready to proclaim that yet. But on the IPO space in particular, there's a lot of supply that's going to need to come into the market to be able to buy these IPOs because we're talking about several $1 trillion of market cap. So I do think that it's a contrarian negative, actually, that all this is coming out, but I don't want to be negative on the market. But at the end of the day, from our lens, SpaceX and Anthropic are the two better companies.
All right, Brian Balsky, got to leave it there. So thanks very much for your time.
Thank you.
We do want to take you back to Kananaskis, Alberta. The Premier of BC is talking about the Alberta referendum on separation.
Myself, Premier Smith, everybody across the table, that a unified Canada is what enables all of the work that we want to do together to build a strong economy, to build the kind of country that we want. In the absence of a unified Canada, we'll be poorer, we will not be as successful, we will give comfort to people who want to break up our country and sell it for parts. And so that very clear language at the beginning of the communique is a reassurance to me. I remain incredibly anxious, frankly, about this. I've seen the Brexit referendum that was just supposed to be a chance for people to express the clarity that they wanted to stay part of the EU, and it did not end up that way. I've communicated those anxieties to Premier Smith. She understands them. And my hope is that we can all come together and, as a unified country, address those concerns, because we can't address shared concerns together. Just like a family, we can work it out together, and we'll be stronger for it. And that's where I hope we end up.
And to you, Premier Smith, what did you hear from your counterparts at this table about those same concerns? This reads like a manifesto of why there shouldn't be a referendum.
Well, as I told you yesterday, in British Columbia, Alberta, and Saskatchewan, we have citizen-initiated referenda. British Columbia themselves had one when 700,000 people signed a petition on the HST, and that went to a vote, and it probably didn't go the way the government of the time thought it would go either. And so we're very conscious of the fact that 700,000 citizens signed one of two petitions wanting to have this question, and it's my job to ensure that they have hope in Canada again, that we have to address the legitimate grievances that have come from 10 years of economic attack on our province. And I'm grateful that the Prime Minister is working with us to address those legitimate grievances. And so that's what I'm going to be working on over the next 5 months, is to convince those Albertans who have lost hope that there's reason to have hope again. And I hope it's forums like this that allow for Albertans to see just how strong we are as a Western Canadian group of provinces and territories. It is, when you think about the incredible opportunity that we have, that we're already the population size and economic strength of Ontario, And we're just getting started on opening up markets into Asia. It seems to me that when you look at what we've agreed to in this communique, there is an incredible amount of optimism and hope that we'll be able to work together to develop those corridors. So I think that was what we spent most of our time talking about over the last couple of days.
Thanks, Ben. We'll go to our next one at the mic.
Hi there, Julia Wong, CBC National. This is for Premier Smith. You've said it's worth taking a look at Section 35 of the Constitution, which affirms treaty rights and includes a duty to consult with Indigenous groups. I know that Manitoba Premier Canoe said that he told you he wants it to be respected. I wonder if you brought this up with your counterparts, and if so, what conversations were had?
No, I mean, the way we're going to seek clarity is through the court. We think that the duty to consult is meant to be looked at through a lens of major projects, and we take that very seriously. We had an Indigenous roundtable yesterday where I shared with the premiers how we're using our Alberta Indigenous Opportunities Corporation to help underwrite major project participation, to give revenues to Indigenous nations, and how we want to continue engaging with Indigenous nations on that. But the issue, I think, in the court is whether that duty to consult should apply to citizen-initiated petitions. And that's where I think that the court erred in judgment, and I think it's also anti-democratic, the decision that they made. But we'll make the arguments in court about what the limits to duty to consult ought to be, and we'll see how that conversation goes. There's a couple of rounds that we have to go through, obviously, to Court of Appeal, probably also to the Supreme Court of Canada. But we want to make sure that we have a very clear understanding of what the duty to consult really means and what it doesn't mean. And I think at the moment there's a lack of clarity on that.
And you've talked a lot about...
Sorry, I'd like to respond. So I think we know that is not correct, a lot of what you just said there, Premier Smith. Specifically, and we spoke about this, so I don't mind repeating this. It is not up to the petition gatherers to fulfill the duty to consult. It is up to you as the Alberta government to fulfill the duty to consult. And in this case, when there's clearly going to be an impact on well-established existing hunting and fishing rights by putting up an international border, if some would have their way, the judge ruled, and I would agree with the judge's ruling, that is going to infringe on rights. And so there is a duty to consult. Now, to take a step further, for the Albertan who's been frustrated over the lack of progress on pipelines, you've got the Premier of BC announcing LNG, we're working on Churchill, we're working on northern trade corridors. This is a moment to get big things built in Manitoba. And I would say now is the time to work together. Why don't we hold off on this referendum talk for a year or two and see if we get these pipelines under construction? Because at the end of the day, we want Canada to succeed. We're all very proud of this place. I myself am very, very patriotic. And what I think it's important for us to say when we hear this sorts of discussion happening here in Alberta is for us to say, okay, thank you First Nations in Alberta for hitting the pause button on this. Now the rest of Canada, let's work together and show Alberta just how appreciated they are in the rest of this country. Ben, c'est pas nécessairement un désaccord, c'est juste un fait. Que la section 35, c'est un fait que le gouvernement dans le Canada doit...
We have been listening to some of the premiers speak. They've been at a two-day meeting of Western premiers. They're now in Kananaskis, Alberta. Obviously, a hot topic today is not only energy and infrastructure that is being built or planned to be built, but also the referendum question that the premier in Alberta decided to put to the people in the fall, one that won't be binding in an answer, but will ask whether Albertans support leaving Canada and going on its own, and whether there should be a binding referendum held on this point at some point. So we had a couple of the premiers there respond to that question about separation. We're going to take a quick break. We're back in a moment. Here are the stories we were following in the newsroom today. Canada's working on a comprehensive deal with India to boost trade and investment. The Indian Commerce and Industry Minister, Piyush Goyal, is on a three-day visit. He met with the Prime Minister in an effort to strengthen bilateral ties. Mark Carney says a deal with India would be a game changer for Canadian businesses and workers. The two sides say they hope to conclude a deal by the end of the year. The Fraser Institute says the combined federal and provincial debt is expected to reach $2.4 trillion. Their study shows debt has grown substantially since the 2008 financial crisis. The combined government debt now equals about 75% of the Canadian economy. Manitoba has the highest combined debt share of the economy. Alberta's provincial debt remains the lowest. Shares of Micron soaring after the chipmaker surged past $1 trillion in market cap for the first time ever. The increase is being driven by demand for its memory chips. UBS nearly tripled its price target on the stock. Micron is among a group of chip makers benefiting from the next stage of the artificial intelligence race as investors seek out stocks tied to central processing units and memory. Up next, could AI end up creating rather than eliminating jobs? We'll take a look at that in a moment. Mass layoffs by Oracle, Meta, Amazon, and others fuels fears about AI making some workers redundant. But could AI actually help create more jobs than it eliminates? Let's talk to Jeffrey Roach about this. He's chief economist, LPL Financial. Thanks for joining us today.
Good afternoon. Thanks for having me.
So OpenAI CEO Sam Altman had predicted massive job losses for white-collar workers. He did that a few years ago. And now he's saying he's happy to be wrong and sees no big jobs fall off, no apocalypse on the horizon. Do you think he's right about his latest outlook at how AI is affecting the labor market?
I think he's right that it has not been and has not generated an apocalypse for labor demand. So he's exactly right in that sense. Now, granted, the impact from AI is not altogether straightforward. It certainly augments the demand for certain categories of workers, and unfortunately it does automate and replace other categories. So it's very possible that if you're in a job where you can be more efficient and more opportunities to use your high value output, you could actually see an aggregate in the economy and an increase in demand for workers, not necessarily an elimination of them.
Okay, the last U.S. jobs report had unemployment at 4.3%, so below historical long-term average. You mentioned that it's not really clear. We're not seeing the clarity around job losses in AI. Why do you think that is?
Well, I think it's because you think of a job, it's a bundle of tasks. We don't often do just one thing. And if you do, then that's the highest risk of being automated. I think one factor as well in terms of the very, very low unemployment rate we see is the fact that we have a shrinking labor force in general, an aging population. And so just the sheer demographics explains the fact that we can see a declining unemployment rate and yet not necessarily a clear picture on where the job market is. In addition to that is you also see some varying impacts depending on the age of the worker. So new entrants coming out of grad school or undergraduate, you're going to have a tougher time. The job market is not as good. However, if you have a few years experience, you're in the 35 to 55, it's interesting to see that the increase in demand for that category of worker. And it does make sense when you think about the nuances involved in a typical job. If you have the experience, AI can allow you to be more efficient, hence the increase in demand for someone like that.
When you look at this, I'm wondering if you look at sector or skill set, how are you, when you're looking at what jobs are going to be created versus what jobs are going to be eliminated? You mentioned high value jobs, for example. Can you just expand on what that looks like for you?
Well, it's very likely that certain jobs don't exist today that will exist, say, in 5-10 years. I think there's a great stat out there that struck me when I first read it. When you think about 60% of jobs today did not exist in our grandparents' age. I think that's very telling, and it really, I think, reveals the dynamic nature of the labor market. And that's one of the reasons why I think there's still a lot to be seen and a lot of unknown. We truly don't know the full impact yet of AI, particularly on efficiencies and labor market demand.
Yeah, we have seen, as we talked about at the start of this, some of the big technology companies, of course, wanting to spend more money on the build out. And so they're doing layoffs there. We're seeing some of the backrooms of financials benefiting from AI and letting people go as a result of that. But because the build out is still going on in such a big way, is it possible we could have this big fall off of jobs all at once at some point in the future?
I don't think that's likely. I think it will be more gradual because there's a gradual phasing in of the application of these AI agents and usage of them in industries. And so in essence, that does give us time for us to just observe the different impacts across industries. So I think that's one way to kind of calm fears, that going back to your initial point in the beginning of the interview here, it's not an apocalypse because I think we're seeing a progression. Now, granted, I think we can harken back to history. If you're a telegraph operator and you see an improvement in technology or a new technology coming to market, yes, you will no longer have a job in that sense. So there are certain categories that have risk, and we've already seen that already, but we don't know in some of the more complicated multi-tasks of a type of job. We just haven't seen the full impact quite yet.
All right. You referred to this, and I'm wondering if you can tell us more how AI can help governments, for example, cope with populations that are shrinking either because they aren't getting as many immigrants coming in or because their populations are getting older and getting out of the workforce. So how can they be helped in this way?
Well, that's right. I think the improvement in technology allows us to see an improvement in productivity. And I think that's exactly what needs to be seen when you think about an aging population and you have a shrinking labor force. The only way to get solid economic growth is to see a spike in productivity. Now, we've actually seen some improvements in productivity over the last couple of years, specifically the years following COVID during the work from home. In fact, there's been some really interesting research done on hybrid work allowing for greater productivity. So I think the fact that we're seeing the infrastructure and the tools being laid out for a smaller labor force to increase productivity and to continue to grow an economy.
What about for earnings? What should investors expect when they're looking at how earnings could change as a result of AI?
Well, certainly look at the details of the cost structure. Are firms managing costs, not just labor costs, and this is where there might be some improvement, but also capital expenditures. Are they using the build out of AI wisely and setting the stage for improved efficiencies and improved profit margins? I think that's where you need to look for as an investor.
Jeffrey Roach is Chief Economist, LPL Financial. Thanks for joining us. Appreciate your time.
Thank you.
Coming up next, Canada partnering with Ukraine to support with drone supply and production in this country. We're back in a moment. We do want to share this breaking news. CTV News confirming that former Environment and Climate Change Minister Stephen Guilbeault is going to resign and will tell the Liberal caucus tomorrow. Multiple sources telling CTV News Guilbeault has been concerned, of course, about the government's changing climate policy as Canada looks to become an energy superpower. Guilbeault was brought into cabinet by Justin Trudeau, former prime minister, and some of his environmental policies, of course, are being changed and rolled back under Mark Carney's Liberal government. After years of exclusively manufacturing drones at home, Ukraine will now partner with a Canadian company to make them in Canada. Sentinel R&D operates in Ontario. Let's go to Walter Dorn on this, professor of defense studies, Royal Military College and Canadian Forces College. He joins us today from Ukraine. Thanks for joining us today.
Thank you, Marilla. Good to be with you.
Why does this make sense for Ukraine?
Well, if Ukraine can have a manufacturing capacity outside of the country, then it won't be subject to Russian attack, and it can be revenue generating. And in addition, the Canadian government can be funding Canadians to be developing drones and gaining expertise while Ukraine actually gets those drones. So in fact, those are Canadian paid for drones manufactured in Canada under the current vision. and that Ukraine would then be able to use them in their fight against Russia.
What led to Ukraine making this change in policy?
I think President Zelensky started to go from a more introverted, let's do everything to win this war, to saying this is a longer-term war, and we're going to need to have an industrial base that's just wider than what they have in the country. So they started to reach out, and they realized that the Ukrainian people and military had created a fantastic capacity that other nations wanted. So it wasn't just Ukraine going with a begging bowl to other countries, but saying, look, we can actually come up with joint ventures with win-win kind of industrial partnerships that can help not only Ukraine, but the other countries, and that will make it much longer lasting.
Yeah, let's talk about Sentinels. Their drones, I understand, can be used for many different things. Are these the kinds of drones Ukraine is used to deploying, or are they used to deploying more specific of these crafts?
Well, Sentinel R&D is a startup Canadian company without a long track record of producing drones and putting them in the field. But they will be using Ukrainian designs for the airframes. And they're the Ukrainians, although that company in Ukraine, Airlogics, has only been in existence since 2020. They now have a huge amount of experience, more than 50 personnel. And they will be providing a lot of expertise for the Canadian company. So essentially, we're providing the manufacturing capacity and hopefully some innovations in the form of composite materials that can be used to make the drones. And Canada also produces some pretty excellent cameras, so perhaps those can be incorporated into future drones. But right now, it looks like most of the expertise is coming from Ukraine.
Do we need this? We talked about the benefit to Ukraine. You talked about what Canada is gaining, but is it something we need?
Oh, for sure. Yeah, the drones are the future of military operations. There's going to be a huge revolution in military affairs. We're already seeing on the battlefield in Ukraine. The Canadian military has a long way to go till we've incorporated drones into our own battle procedure and using them in swarms for intelligence gathering, using loitering munitions, using them for long-range patrols, particularly in the Arctic or off of the second largest coastline in the world. Drones are really going to be important for Canadian defense in the future, and so we need to up our game in this area.
Walter, is this the only partnership Ukraine has opened up to, or are they partnering with other countries as well?
Oh, no, they've really opened up a lot. They've already made deals with countries in the Persian Gulf, or let's just say the Arabian Gulf. And those are for counter-drone technologies and counter-missile technologies. They've worked with German companies to create loitering drones. It's a major initiative that President Zelensky launched last year to be able to do these joint ventures, and it's already bearing significant fruit for Ukraine.
Could the involvement of Canada partnering with Ukraine on this affect our relationship with Russia? Is that something we need to worry about?
I think we're already very much in the Ukrainian camp. We are solidly on the side of Ukraine and in the defense of its territory. And I don't think that this kind of industrial partnership would make Russia see us any differently. If we put our own personnel in the field, if we deployed people to help with the actually running of those drones inside of Ukraine, then yes, I mean, the Russians may see us as being part of the combatants. But right now, just as a manufacturing base, that would not be a strong worry for that Russia would then see us as a combatant or someone to attack.
What's the timeline on these drones being made in Canada and sent to Ukraine?
Well, we only will see the signing of an agreement at the Canadian Exposition next week. CanEx and Security and Defense will be exchanges of industrial notes, and we have to see that the Canadian government, through the Department of National Defense, is funding this. Then there have to be export permits. So I would say that we might hopefully see the first drones in the beginning of next year. but that's dependent on a lot of factors, and I wouldn't be certain about that.
All right, Walter Dorn, appreciate you joining us, sir. Thanks for your time.
No, thank you. Good to be with you, Marla. Bye for now.
Up next, insolvency volumes in Canada are at the highest level they've been since 2009. We take a look at what that means when we come back. A new Equifax report says insolvency volumes in the country have risen to the highest level since 2009. For more, we sat down with Rebecca Oak. She's Vice President of Advanced Analytics at Equifax Canada.
First of all, these are insolvency volumes. It's the highest since 2009. Now, since 2009, we have seen a lot of population growth within Canada. But if we look at the rate, so per capita level, it's actually the highest since 2019. Now, that's significant because in 2019, we were in a period of increasing financial difficulty and stress. And in fact, the only reason we seemed to come out of that really was actually the pandemic, where consumers pulled back on a lot of their credit usage. So it is a concern because obviously insolvencies are a great indicator of extreme financial stress across the Canadian ecosystem.
And did we see that with other prior times? Was there a pullback? Is that something we could be expecting right now? Or this time around? Not right now, but this time around?
Yeah, no, great question. So, I mean, like I said, 2019 really was a bit of a peak. And so we are experiencing a similar peak right now. The numbers are still rising. They've risen for the last couple of quarters. And so we do expect them to continue to rise probably, later into this year. Now, insolvency numbers do tend to be a little bit of a lag measure in the sense of, a consumer has to reach quite an extreme situation to become insolvent. So, I think what's really important is we look at what's also happening right now in Canada with some of the early stages of missed payments on credit. And, they are starting to stabilize a little bit. So there is some positive information as well as those insolvency numbers.
Have things changed on the help, I guess, for people who are approaching that decision of deciding if they go face insolvency or not? Have banks tried to work with them to try and avoid it or things like that?
Yeah, absolutely. I think when a consumer is approaching that kind of financial stress levels, lenders are always willing to have conversations and try and help them through that situation. There are also lots and lots, of course, free organizations out there that can certainly support consumers through that kind of difficult period.
And just looking at the numbers, total consumer debt, $2.66 trillion, up 3.8%. That's concerning because, our population hasn't grown, and so that means people are building up more debt, aren't they?
Well, yes and no. So when we look at those numbers, a big chunk of that is actually mortgage debt. So around 3/4 of that headline number tends to be mortgages, and that is up year on year. And non-mortgage debt has risen as well. But what is a little bit of good news is that in Q1, we actually saw a pullback in terms of non-mortgage debt. That fell around $487 million at the end of the first quarter. Now, that's significant because seasonally, we wouldn't expect to see that amount of pullback or drop in non-mortgage balance. So what that tells us is consumers perhaps are being a little bit more prudent, that they may be pulling a little bit back in terms of some of their spending, some of their credit usage, which is good news on the credit side, potentially less good news if that continues for the business and small business side, because obviously, we need consumers to be spending to help the economy. So it is positive for the credit side, but maybe not so much for the wider economy.
Yeah, and there's the rub, isn't it? And with mortgages, how are they looking? We've seen mortgage rates surge over the last little while. They've flattened a little bit, but still, that must be putting pressure on.
Yeah, when we look at mortgages across Canada, average mortgage amounts, they have kind of dropped a little bit because some of those house prices have fallen. What is a concern, though, is still we are seeing missed payment levels on mortgages rising both from a volume standpoint and also from the overall balance of those mortgages across the country. Now, that is really concentrated in some of those hot housing markets of Ontario and British Columbia, where we did see mortgage levels really rising, particularly during the period of the pandemic. post some of the renewals, when we're kind of coming off those low interest rates and going on to higher interest rates, that is unfortunately causing financial stress. Now, if you are in some of the other provinces like Quebec, Saskatchewan, actually we're seeing mortgage mispayment levels starting to drop now, but it is still a bit of a problem in those hot housing market areas.
And how much has the delinquency gone up? What's the rate at right now?
So when we look at the balances, it's around 32% year on year. In Ontario, that is 52%, and in BC, 36%. So it's those two provinces that are really pushing that up compared to 12 months ago.
And is that a concern? I mean, the fact it's up, it's jumped to 32%. Is that a big jump, or something that's manageable, or is it concerning?
I think when you look at it, overall, the percentage level is still quite small. So when we think about mortgages, they do tend to be the last type of credit product that a consumer will miss a payment on. So we're still talking quite low percentages, kind of 0.2%, 0.26% levels. So that side of it, it's small, but it is a wide indication of general financial stress within those regions in particular. Now, again, it's not just about the mortgages, of course. We have affordability challenges across Canada. And again, in some of those hot housing markets, that combination just makes it a little bit too much for many consumers to manage.
And which way is it? Do we have a trend on it at all, or is it still very uncertain, very volatile?
Yeah, so I mean, within Ontario and BC in particular, we are still seeing those numbers rising currently. When we think about the renewals and kind of the number of renewals that we had in 2025, there are still many that are renewing this year as well. So we do expect to see those missed payments on mortgages continuing through 2026, particularly in those regions. I think what's really important now is what's happening in terms of on the global stage right now. If you think about things like the inflation levels and kind of things like gas prices, that can have a serious impact in terms of not just homeowners, but also non-homeowners, particularly those maybe with lower incomes. When inflation takes hold, that can really tip the balance for a lot of consumers with those lower incomes. So I think what's going to be really important as well for the rest of the year is what happens to those gas prices and the impact that can have.
Rebecca Oakes is Vice President of Advanced Analytics at Equifax Canada. Toronto businesses bracing for a wave of FIFA World Cup tourists. The city is scrambling now to get the last-minute things done. CTV's Heather Wright has more.
Extra TVs are being hung up at Fox & John's, a restaurant and bar in Toronto's Liberty Village.
We're adding TVs basically anywhere we could fit them.
Bar manager Samantha Besteo says World Cup preparations began 6 months ago and include the hiring of additional staff and a new streamlined menu to help serve the packed crowd expected here throughout the tournament.
It's going to be such a fun time here just in the city as a whole, but it comes with a lot of nervousness and we kind of don't know fully what to expect. So we're kind of going into it super excited, positive spirits, kind of ready for anything though.
Liberty Village is used to hosting big crowds. The neighborhood is the unofficial gathering spot for fans of Toronto FC. But the crowds expected during the World Cup will likely eclipse anything this area has seen before. For the roughly 10,000 people who live here, the tournament brings excitement and some trepidation.
It's definitely going to be busy, but I think it'll be fun. It'll be a lot of good vibes.
With 45,000 fans expected to pack Toronto Stadium for each match, in addition to the fan festivals located nearby, the foot traffic through this part of town will be a big boost for businesses.
It's going to be interesting, I guess. There's going to be crowds of people. There's a lot of hype behind it.
Kevin McDougall owns Merci Mon Ami with his wife, a restaurant and catering business. It has survived the economic crisis of 2008 and the COVID pandemic. He says the economic climate right now is just as tough, and the World Cup will be a big help.
So the margins are tighter than they ever were. So something like this definitely will help increase volume, which increase revenue. So your margins are still tighter, but you're getting more revenue.
So the World Cup kicks off in less than 3 weeks here in Toronto, with the city expecting more than 300,000 visitors over the course of the tournament. Heather Wright, CTV News, Toronto.
And that does it for The Close. Thanks for joining us today. We'll see you back here tomorrow.